everyone. I'm Brett Rice with Core Vision Financial Group. This is episode 3 of our video series on financial topics. Today we will be joined by Brent Thoman, also from Core Vision Financial Group. And what we're going to do is we're going to give Brent an opportunity to introduce himself. So go ahead, Brent.
Thank you, Brett. As Brett said, my name is Brent Thoman. I've been in the financial services industry for 21 years. I started in 1999 with my father, who had been in the industry for 49 years. Myself, my partner Jason Pike, and Bo Browning created Core Vision Financial Group in 2015.
Thanks, Brent. Thanks for the introduction. So today the topic we're going to talk about is life insurance. Brent has a lot of experience with life insurance. He's someone that, usually here in the group when somebody, is working on something with life insurance, he's kind of the guy we go to ask questions about that. And, he's been doing it longer than anyone else here in this office, so he's one that's got the most experience. So Brent, let's talk about what is life insurance? What are some basics of life insurance that people should know?
So some basics of life insurance would be protection of assets, maybe a home, to pay off debts, final expenses, also for college planning if someone dies prematurely to help with their children. Also would be for business expenses, a buy-sell from two partners, also a key man. Also the biggest thing would be income replacement if someone dies while they're working, to help with a spouse to replace some of that income. When someone passes away, on average, you need 70 to 80% of the total income before the passing to replace. So if the other spouse is working, we need to replace the one that has passed away. So the majority of it has to do with some type of protection, and that's why you see a lot of TV commercials talking about, are you protected for your family, whether it again be college, whether it be income protection, whether it be paying off a home or paying off debts that were occurred while the person was still living.
Good, thank you for that. I think a lot of times people, you hear from friends and family and coworkers, about life insurance theories or perceptions of life insurance. And I think, since I've been involved in life insurance, that I've learned a lot of stuff to where I'm like, that seems kind of contrary to public opinion on that. Why do you think there's so much misconceptions and myths out there about life insurance?
There are quite a few myths, and I think some of it's just more, some people don't want to have to deal or think about their ultimate demise. Unfortunately, all of us are going to pass at some point in time. And some people will look at it as, well, it's not going to benefit me, so why would I need it? I would say that would be the last way to look at things. Also, since they are already apprehensive, they start thinking, well, it's going to take forever. I might have to do a medical exam. And on the contrary, usually it's 30 to 45 minutes of an application. May have to take some blood work, just very minor things to do, and it can be done in an office or at your convenience of your own home. But I think most of it has to do with people may not want to be thinking or talking about that, so it's an easier excuse to say it takes too long than it actually does.
So when we get to talking about life insurance, traditionally we're talking about two different types, right? There's perm and term. So permanent insurance and term insurance. Can you kind of walk through those a little bit and kind of give everybody a little background information on term and perm insurance?
Sure. To just kind of do a high level here, term insurance is exactly what it says. Term being 10-year, 15-year, 20-year, 30 years. You're buying this insurance for a specified amount of time. It's going to be your most cost-effective route, or cheapest, however you would like to say that, because most likely it will never pay out. They only pay 1% to 2% of all term policies out. This is why the cost is so less than a permanent insurance. Permanent insurance is something that you're looking to maybe have guaranteed to the end of your life, or it could be that you need it longer than 30 years. It just depends, because everyone's situation changes over time. The term insurance, again, may be just for if something prematurely happens, to pay off college tuition for children. It may be to pay off your house debt if you're young and not maybe in your prime earning years. The permanent may come down the road, or maybe a combination early, but usually it happens in your 30s and 40s where you're making a little bit more money. You maybe reduce the amount of risk you need because children are gone, house is more closer to being paid off. This may be more for income replacement, potentially in your 50s or 60s. As we know, Social Security, if one passes away, they lose that Social Security. You get to take the higher of the two, but you lose that Social Security, so they may need to replace potentially some of that Social Security or some of a pension if they didn't, depending on what type of route they chose for that. So really, I mean, more cost effective for term, and we usually see that in younger people, or if they need to do something for a 10-year that's a rather large amount, term is usually the better way to go. Permanent being, I need some cash value maybe to potentially use down the road. Permanent also, I need it until I actually pass away in case my spouse would need that income replacement because we didn't live long, healthy lives or long time lives. So that's, I would say, high level view. That's what we're looking at there. This, what we talk about, you'll hear owning versus renting sometimes. Owning would be buying a permanent policy. Renting would be buying a term. Since there's no value of term unless you actually pass away, you're more or less renting. That would be something like paying your home insurance. You're renting that insurance, saying, well, if I have a fire, then I'll use it. But like term, you're going to, same thing, at 10 or 20 years, you're going to pay for it. And if nothing happens, you don't get any of that premium back. Now there are, again, certain types of policies that's not the case. You can, but right now I won't go into that depth at that. But renting would be owning the term insurance since you're only keeping it for a period of time, and owning would be the permanent insurance because you have cash value and you could have that potentially until you actually pass away.
There you go. Let's also talk about people being afraid of insurance because they feel like it's too complicated. They don't understand how much they're gonna need, or we had already talked about, kind of in the intro, what's life insurance used for? Like when you're talking about income replacement versus asset protection, and all of those things. So why is it that everyone thinks that life insurance is so complicated?
Again, I'm not sure there are. Nowadays, there's so many different products and so many different riders and ways you can do it. It can become very complicated, but talking to an advisor is huge. To first discuss what you're trying to accomplish. What are you trying to cover? What do you need as a specified time? How much? The rule of thumb for 100 years has been 10 times your salary. I think that's a starting point. I don't think that's the be all to end all. I think that's a starting point, starting with the 10 times. It may be more, it may be less. Complicated, again, with the different products, it can become complicated. It doesn't need to be for the most part for most people. Most of those are just variations of certain products from the very beginning. Very beginning, you had the whole life where you paid your premium. As long as you paid your premium, you had cash value with the potential of increasing death benefit. And then you had term. You bought it for a specified number of years, and you went on down the road. Now, there's been so many products vary from that, but they originally are term or permanent. But the complicated part is more, I think, just not understanding what you need and how much you need and how long you're going to need it. That's what makes it complicated. And I think statistics are 44% of all millennials think the cost of insurance is 5 times the amount. Again, it's because of just not understanding and talking to someone. You see a lot of the TV commercials talking about for 33 cents a day, you can have coverage for that for your life for $100,000 or whatever that number is. But most of that is term. And then they also have the ones from, let's say, a Colonial Life that do for final expenses of 5, 10, 15,000. They seem fairly cheap, but they're actually, for the cost per thousand, are very high because they were already baking in the fact that people that are uninsurable are going to buy that because they're called guaranteed insurability on that. So I don't think the complicated part is more, it's just the lack of understanding or never dealing with it. That's why talking with an advisor would be your best route before you making any decisions.
No, I think that's great information. I think, my experience has been that when you get to talking about life insurance with people, a lot of people are kind of intimidated by it because, like you said, they don't understand, they've never sat down and talked to anyone about it. So they're just unfamiliar with, all of the specifics. Like you said, there are a lot of different types, and they can do a lot of different things. And the riders, I mean, it definitely can become a very complicated topic. But depending upon how you would like to use life insurance, I think it can uncomplicate it just by answering a few questions. You could it's, oh, I just need a basic term policy, or I just need a basic whole life policy, based upon whatever you're trying to do with the life insurance policy.
Well, I'll say one thing, Brett. Some of the I remember my dad talking about this back in the day. Everybody seemed to walk away from an insurance salesman because they didn't want to get hit up for that. I think some of the figures you hear now, if I say buy a $500,000 life insurance policy, say, well, I don't need that much. Well, if you think about it, if you use that to pay off your home, or let's say you don't, let's use it for income replacement. On average, on 4%, when it comes to financial, that's kind of the rule of thumb, that 4% can last 30 plus years. There's a 90+% chance of that happening. And I know I'm throwing a lot of figures, but 4% of 500,000 is only $20,000 a year. And if we got to replace 70 or 80% of income, that means somewhere you're going to have to be only making $28,000 to $30,000 to get that done. And for the most part, I think some people hear that $500,000 in cash coming to you. And that doesn't mean a whole lot if you have to replace 70 or 80% for the next 20 years. So it can be very intimidating when you talk numbers with people and they say, oh, I don't need that much. And they may not, but to understand what that means is $500,000 at 4% is only $20,000 income replacement, which may not be enough. So can be a little intimidating when those numbers are coming out. And I think some of that confusion and miss happen because of that. So those can be debunked, again, just talking with someone and kind of figure out what do you need, how long you need it, and what's it going to be used for.
So let's also talk about, once you buy life insurance, your need for that, or the amount you have, or what you're trying to do with it could change during your lifestyle. So when you buy, say a policy in your 20s, and then as you're moving through life and your situation changes, whether you get married, have a child, purchase a home, grow a business. As you move through that, how can someone's life insurance needs change during their life?
Well, I think you explained it just perfectly. I mean, when we get in our 20s and let's say we're just bought our first home before we're even married, how are we going to cover that if something happens to us? You have no one else to leave it to except for maybe your parents. So do you want to leave that burden on your parents to have to sell that or pay that off? Term insurance would be perfect, cost effective. You may just be in your first or second or third year of your job and may not be at your highest earning potential. So we look at that, and then you get into your maybe mid or late 20s. Maybe you've gotten married or had a child, or both. Now you really have responsibility that if something happens, that you have to take care of these other 2 or other 3 or other 4, how many other children you have. It's your responsibility to make sure that they're taken care of. And then as the children grow up, so you're still maybe using term and some permanent. And then you're getting older, you're starting to get into your prime earning years, and now you have teenagers. Your biggest worry is now, what are we going to do for college education? If something happens to me prematurely, can my spouse handle everything else? If you died prematurely when they were younger, now there's only one to take care of the kids. We're going to have to worry about daycare. So the needs change over time, and your worries seem to get bigger as you have children and they get certain ages. And when they leave, some of that responsibility leaves. You no longer have your children that you must take care of. Now it's just maybe your spouse, or you want to do something special for your grandchildren, or maybe you want to be philanthropic and you want to look at charities and say, hey, you know what? I've always been interested in the boys club, the girls club, whatever that is, that was something special in my life. How can I do something to give back? I don't have a lot of money on hand, so maybe I can't do it. Well, life insurance could be that way. You could do that and leave a lasting legacy for something that you really truly believed in. So over time, they do change because your responsibilities change as time goes on. They seem to lessen when children are gone, but then income replacement becomes more valuable to your spouse.
Right. I think for me personally, and my experience has been that this life insurance isn't for you. It's for the people that are here after you pass, right? How do you want to take care of them? How do you want to leave that legacy? Like you talked about, whether that's charitable, whether that's taking care of, someone's college, paying off mortgages, reducing someone's, obligations once you pass, becomes the legacy. Oh my gosh, my dad cared about us, enough that he had life insurance, so in case something happened, we were taken care of. And it wasn't, we'd talked about the other day, an immediate, concern about, oh my gosh, how am I going to pay for our lifestyle? How am I going to keep living the way that we live? Do I have to go back to work immediately? It at least provides some opportunity for someone to be able to go, okay, there is this money. Now I have to figure out how that was intended to be used and what I want to do with it.
Well, you're exactly correct, Brett, because it is for your family and for others, but it's for your peace of mind that you've done your job. You've worked all your life and planned and been financially fiscal all your life. Why not do it to make sure that at your passing, you've done the same thing for your family? So the protection is not for you per se, it's for your family, but the peace of mind is for you, that you've taken care of everything from day one till the end.
So a lot of times when I bring up life insurance, talking to someone that has a need for life insurance, you always hear, well, I have it at work. So let's talk about group life insurance versus individual policies.
You're exactly correct. So I think 60% of all Americans have some type of life insurance, and the majority of that life insurance happens to be group health. A lot of times the company will pay for a portion of that where nothing comes out of your check, usually up to 2.5 times your salary, and sometimes they'll give you options to buy very cheap, which is great. I always recommend our clients to have that. One, if it's free, take it, and if you can get it for very low cost, go ahead. The problem with that is what if you get laid off? What if you get sick and then eventually they lay you off and now you're sick and can't get any insurance outside of work? When you're let go or you're fired or you retire or something like that happens, you no longer have that insurance. And if it has to do with health, you're probably going to have a hard time getting insurance on your own. So I'm always a big advocate of have something other than work in case something happens like that. I mean, we would all love to say we're going to work at the same place for 40, 45 years and they're going to let us take our insurance, but that just no longer is the case. So I definitely always say have it, but I think some people are like, well, I've got plenty at work, nothing, and so if something happens, my family's taken care of. Unfortunately, if something happens at work and you're out of work for a short period of time and that's gone, then the planning has a big hole in that. So yes, take what they give you, and if you need to buy more, great, because it's usually very cheap, but you should have something on your own, because at any time we know that we can be let go, especially in times like this with people being laid off or furloughed and things like that. I think it's just very prudent that you should have something on your own.
Yeah, I think a lot of times people take for granted the fact that they're going to have that benefit forever, and I don't think that it's common knowledge that, you get sick, you lose your job while you're sick, you can't get insurance at that point, and then you don't have that ability. So getting a policy, in advance and thinking about this is what I want to do in order to protect my family, my assets, my business, all of those things, that it's just something that needs to be discussed and, just talked through and, make sure everybody understands.
No, I agree completely.
So now let's talk about one thing people talk about that you touched on just a second ago was the underwriting, the application, the examination, the things that go along with getting a life insurance policy. Can you just talk about that for a second?
Sure. The longer we live, the cheaper it goes because the insurance can collect premiums longer. Secondly, back in the day, and when I say the day is when my father was doing this back in 1961 and 62 when he started, they had 2 underwriting classes, smoker or non. You either smoked and you got 2 times the rates, or you didn't smoke. But as things have gone on and science has progressed, now it's it benefits people who work out, who eat right, things like that. So now you have what's called a preferred plus. If you're in great health, no issues, great cholesterol, great blood pressure, you can get a premium that's very cost effective for you, whether it's permanent or term. Next, Then they have the standard, which I think around 50% of the people in the United States fit into this, saying, hey, I might have an issue, I might have some high cholesterol, but I take medication, or I have high blood pressure and it's controlled with medication. This is where the majority of people fit in. So you have from the best to the kind of average, and there's a couple of ratings in between. And then you have what's called people that might have a little bit more, might have diabetes. It's controlled fairly well, but they'll get table ratings, which means you'll pay extra premium. And then you have the smokers. It used to be if you smoked, if you smoked a cigar once a month, or you smoked 20 cigarettes, you were treated the same. Now they understand that maybe the gentleman having a cigar on the golf course once every 3 weeks is not the same as a gentleman smoking 20 cigarettes a day. Same thing is now you can actually get what's called preferred smoker. You work out, you do things like that. You're not a long time smoker. So it does help out. So again, as time goes on, science and the medical field are noticing that doing different things can help or harm your health. So that's the way it goes now at this point. And again, when you do decide to go for insurance, the company's going to interview you, as in doing the application and all that, but you also have time to say, you know what, when they come back and say you're a standard, you say, I don't have to take this. I don't agree with that, and I don't have to take it. So you're also interviewing them to see what type of company they're going to be, because every company underwrites everyone different. So there is the opportunity to, if one place wasn't where you thought was going to be good, you can look at another company that might underwrite you at a better rate.
Yeah, thanks for that information. There's a lot of good information in there, Brent. So as we're getting to the end here and wrapping this up, let's talk about what are some things you think people should absolutely know about insurance. You want to make sure that what are those couple of points that you want to make sure people take away from this video today, that you're like, hey, this is important stuff about life insurance that you should know.
The number one, it's protection for your family, protection for yourself, whether it's your spouse, your children, your parents, whatever that is. It's make sure you plan. Again, you don't benefit from getting that money, but someone that you love will benefit from that. Secondly, it's not as complicated as you think. Talking to someone and understanding what you're trying to accomplish is what you need to do. Take a little bit of time just to plan for yourself with talking with someone. But again, it will give you peace of mind. I know a lot of times we talk to our clients about having wills and living wills and all that, just talking to see if they have them done. And I always say, I did it for myself when I was younger. I tell them, you'll feel better about it. You don't think about it every day and go, I'm glad I got that done. But guess what? When something happens and you have those documents in place, you're going to be like, man, I'm glad I got that down. It will no longer weigh on your mind. So if you're thinking about it, definitely look into it. Don't be bothered by it's going to be complicated. It's going to be this expensive. Go ahead and go through the process and talk and find out. And you may decide that, it is too expensive. Or you may say, man, that's a way better deal than what I thought. And I'm going to feel, once it's all in place, if something happened to me prematurely or even naturally, that my spouse or my children or the charity that I thought about is going to be taken care of.
Thanks, Brent. That's a good recap there. I like the fact you basically just tied the whole video up in those key points right there. Hey, these are the important things that people need to take away from this. So again, thank you all for watching our video today. I'm Brett Rice with Core Vision Financial Group, joined today by Brent Thoman, also from Core Vision Financial Group. We're located here in Shelbyville, Indiana. We can be reached at 317-398-8200. We're both active on social media, Twitter, Facebook, LinkedIn. Feel free to reach out to us at any point. Thanks for joining us.